Morning and evening, everyone. Welcome back to another episode of the Last Week in PECO. Thank you very much for joining me. If you're in the States in the evening, or if you're here in Asia in the morning. And look at this, we have this wonderful green line in front of us, right? The market is back up, or at least a temporary bounce or a permanent bounce, or we're back in the bull market, or who knows what. This is depends who you listen to, but I'm glad to see green. I think you guys are as well. So as usual with today's show, we're going to cover everything that's been going on in PECO, talk about the market overall. I also have to mention towards the end of this segment, we'll be showing you guys a video where some hosts on CNBC talk about volatility in the market. And I hope you guys will take that into account before we talk about today's news.
Joining me now to talk more about the volatility in crypto and to really hash out the bull and the bear case for this asset class is our expert panel. Skybridge Capital founder Anthony Scaramucci, Duke Law professor Lee Reiners, and CoinShares Chief Strategy Officer Meltem Demirors. Meltem, Lee, and Anthony, thank you for being here. Hope you're getting your Friday off to a good start. We're going to jump right into this. Meltem, ladies first, I want to ask you in a few words, a few phrases, where are we at in the state of cryptocurrency?
The phrase is very simple: fear, uncertainty, doubt. There is a lot of fear out there. There's a lot of uncertainty about direction. And as a result, we're seeing investors pulling back. We've seen buying of the dip. A couple of weeks ago, we saw the largest week of inflows when Bitcoin started its decline. This past week, we saw around 140 million of outflows. So we're keeping our eye on how that expression of sentiment plays out in the market, with people positioning either long or short.
All right, Meltem, fair to say that you are a bull when it comes to cryptocurrency. Lee, I'm going to go to you. I think it's fair to say you're a bit of a bear, at least. If you had to put it in a few words, a few sentences, what would you say the state of cryptocurrency is right now?
Well, good evening, Frank. And the way things are going right now, this might be the last crypto night in America. So I just want to say to Anthony and Meltem, it's been an honor to share the spotlight with you here. 40% of Bitcoin holders are underwater right now. And, this was inevitable. And I've been saying this for quite a while because, the only reason people have been buying digital assets is because they think they can sell them to someone else at a higher price in the future. And eventually the supply of greater fools runs out. And I think that's what's happened. And the problem, if you're trying to assess whether or not crypto is oversold, is what is the methodology you're relying upon? And there's no cash flow, there's no fundamentals. It's an asset that trades entirely on sentiment. And right now that sentiment is negative, and there's no indication that it's going to turn positive anytime soon, especially now that interest rates are rising.
So as usual, we're going to be talking about PECO and what's been going on with the price. And let's get into it. So PECO currently at $2.01. It started off last week or so, $1.96. We bottomed out, it looks like, at $1.70 on May 28th, And now we're back at $2.01. We're up 2.14%, which is fantastic. All right, and if we compare it right to wrapped MATIC is green, PECO is purple. So you're pretty much on par, not a huge difference. And PECO's market cap, $282,200, 2.35% discount on Ethereum, 0.36% discount on MATIC. Okay, our allocations are still pretty much the same from the last time we did this episode. As I mentioned before, we are working on a new index methodology. As soon as that's deployed, we'll let you know. MATIC, 61% of the allocation of PECO at the moment. Gains, 21.05%. Quickswap, 17.51%. This is the methodology. And the last rebalance happened on May 1st. So we will be coming up to another rebalance very soon. Hopefully that rebalance, from what I remember, should have new methodology, which will be fantastic. But let's have a quick look at CoinMarketCap. CoinMarketCap, the cryptocurrency, total market cap $1.314 trillion. So we're back up, which is fantastic. You can see pretty much everything is green in the last 24 hours. Bitcoin at $31,677. Let's see how the market does. I hope you guys are as happy with this as I am. So let's dive into our news for today. So I think one of the big news is for this week, right? Or one of the big pieces of news for this week is that the new Luna chain has launched, and it's just launched. It launched on Bybit and a few other smaller exchanges. And it topped out at about $18 at one point and then crashed down to $6. And then it launched on Binance. I think it's launched on Binance, I believe, today already. And Prior to the Binance launch, of course, loads of people were buying it. So the price launched, rocketed up 70%. But today's news, as usual, right? We're focusing on our MATIC token, which is the largest constituent of PECO. And it says Polygon MATIC entices Terra projects to its chain with the launch of an uncapped, right? Uncapped means no upper limit migration fund. Polygon MATIC has launched an uncapped fund to assist Terra projects willing to migrate to its chain. Financing of the fund will come from $450 million already raised by Polygon, its treasury, and a $100 million ecosystem fund. Polygon is willing to deploy more capital for Terra projects migrating if needed. The fund launches comes in the wake of the Terra community agreeing to plans for the new blockchain of Terra 2.0. So this talks about the UST pegging. We've talked about it on the show before. We're not going to talk about it more. According to a report by TechCrunch, Polygon MATIC has launched a relatively uncapped, so it's a relatively uncapped, multi-million-dollar fund aimed at assisting Terra projects with the process of migrating to its blockchain. Financing for the fund will come from the $450 million. We've already mentioned this. Right? It says, I don't want to put a cap on the fund. UST's collapse was unfortunate. You want to figure out how to help these folks. Polygon Studios CEO. Terra proposal 1623 passes. New Terra chain to launch. It has already launched. Okay, so this is interesting that they're willing to do this. Now, that being said, with the new launch of the Terra chain, because this news is not new, it comes about 6 days ago, right at the sort of limit of what news we want to talk about. But I thought it's very relevant because I think a lot of Terra projects I find crypto is a very loyal sphere. So people who are in Ethereum are loyal to Ethereum until the dying end, are very passionate about a particular ecosystem. When the proposal passed for Terra, a lot of projects said, yes, we will continue to, or we will deploy this on the new Terra ecosystem. That being said, I'm sure there are a bunch of projects who will consider moving to Polygon. I don't know of any projects offhand, but that's definitely something to look into. I remember the last time I'd looked at the price of new Terra was at like $5, and a Luna C, the classic chain, was like 0.00, a very small amount of money basically. So the other thing I wanted to talk about today was this very cool analogy. So it explains about Web3. It says Web3 can be a bit difficult to understand. Before 0x Polygon Avail launches soon, we wanted to share an analogy to help you with an often misunderstood Web3 primitive, rollups and their evolved form Validiums. Start your engines, right? And they have this cool graphic over here. It says modular blockchains work a bit like cargo trucks picking up freight and traveling up a steep hill. Drivers have to inspect every transaction before they're loaded. Once loaded, those drivers have to take every transaction to the blockchain. But the more transactions are in the truck, the heavier they are. But the heavier they are, the more gas they need, and the gas is expensive. The same drivers taking the transactions up the hill are the ones who have to check, and that slows down the whole network. Instead, imagine where dedicated people that could check each transaction before drivers even showed up. Instead of having carried all the transactions up the hill, drivers could store them downhill, just carry a log of exactly where they live. This is the world Avail creates. So that's interesting. So before the transaction is in progress, you know what is in there, okay? In a modular world, transactions are taken to execution environments to be checked before Ethereum drivers even arrive. This is what is meant by off-chain execution. Okay, that makes sense. In return, these execution environments sign off on that batch of transactions. So this is what I understand sharding is. These are proofs of execution. Congratulations, we've just built a rollup. This alone speeds up blockchains like Ethereum substantially. Drivers don't have to wait or use up Ethereum resources checking transactions before picking it up. They are still needed to be carried uphill, and as we know, that's expensive. Instead, drivers can park transactions downhill using a service like Avail. This is what we mean by off-chain data availability. In return, Avail gives a log anyone can use to find transactions if they want to find them. This is proof of availability. Wow. Proof of execution, proof of availability. With transactions already checked and no need to take transactions to the main chain, drivers only have to carry two things: a proof of execution to prove transactions have been checked. Okay, important. A proof of availability so anyone can find transactions off the main chain. Congratulations, we've just built a Validium. I'm not sure how you pronounce that. Somebody can correct me on that, please. The best part is that these two proofs cost substantially less gas to carry to the main chain than all individual transactions would. And because drivers don't have to execute anything ahead of time, no more traffic jam. Yeah, that is fantastic. Traffic jams are terrible. You guys know I'm playing a NFT game on Polygon Sunflower Land. And sometimes when we're doing transactions on the network, it says the network is congested. So rollup, execution off-chain, data availability on-chain. Validium, execution off-chain, data availability off-chain. Okay. Rollup, execution off-chain, data availability on-chain. Validium, execution off-chain, data availability off-chain. That's it. Things can get more complex from there if you want it, but we hope there's a solid intro into the space. OX Polygon Avail enables many more things than just Validiums. We didn't even get into the data availability problem, but we'll save that for future posts. If you're interested in turning your rollup into a Validium, you can learn more here. Okay, interesting. I love that analogy. It is definitely something I'd like to share when I finish this video. I think I'll probably share that on my personal Twitter because that explains Validium or Validium. Yeah, I'm going to probably tweet at OX Polygon and say, hey, how do you pronounce this? Okay, guys, let's move on to our next piece of news, which is about Gains Network. It says, in a bear market, what attractive options do you have to deploy your stables and get a high ROI's return on income, a short thread? Hint, you're going to want to get some DAI, right? DAI is stablecoin offered by makers. In efforts to increase the collateral limits on G-Trade, we have to increase the DAI distribution for our DAI stakers. Okay, so what does this mean if I'm considering staking my DAI on gainsnetwork.io? It means our DAI stakers have noticed a significant increase in their APR, as the current average API is 37%, so that is very impressive. As the current average API is 37%, all paid in DAI from trading fees. We know you love your yield or XMAKI. So we've seen all this before. Once more people start staking the DAI, won't the APR decrease again? Is this cuff transitory inflation? One feature that our platform uses to manage risk is dynamically adjusting the maximum collateral a trader can use to trade based on the total DAI in our vault, along with some other factors. This allows us to service larger trading volumes when the vault is more full. What does that mean for me, the liquidity provider? TLDR, more volume equals more fees for revenue, more APR distributed to you. Wow, so the more DAI that Gains has in their vaults means more APR, which is fantastic. Check out our staking pools in DeFi, Gains Network, DeFi Ecosystem, and Polygon. As always, please do your own research and please free to come ask questions in our official Telegram and Discord. You guys know we have a very good relationship with Gains Network. One of their community managers, Lunaman, fantastic guy, very helpful. Please head over to Telegram and ask questions if you want to. Note, you can withdraw up to 25% of your max stake at any time, every 24 hours for our DAI vault. So if you do deposit your DAI, and it's staked right, you can get 25% back every day for 4 days, eventually getting back 100% in 4 days. So you're not locked in for 30 days or 60 days or 90 days. Like in some places, you can deposit your DAI and get it back pretty soon. So the other thing I wanted to highlight with Gains, is because we have not checked out their website in a long time, is how much volume they have done and a bunch of other things. So Gains is a decentralized trading platform, leverage trade in cryptos, stocks, and forex. So right, the last time we talked about this, or we did mention they are doing stock trading, and they are at $13 billion in all-time volume since the last time we checked. That is impressive. I believe the last time we checked, there were $8 billion in trade volume. So to summarize for you guys, layer 2 integration, minimal gas fees, medium for prices, 0% price impact. That's really important. Audited by CertiK. One of the other things which I did not notice that is really cool is they have a practice platform. So virtual leverage trading, G-Trade chat, claim your free 10,000 DAI and train your leverage trading skills. So you guys know I'm not a big fan of leverage trading because I've had friends who have lost a lot of money when they've gotten leverage trading. I've also wanted to learn leverage trading. And let me tell you, Gains has some very interesting tutorials available via their Medium site, where you can read and it explains how leverage trading works. I like this idea even better, where you can use virtually 10,000 DAI, right? $10,000, right? Because one DAI is to $1 DAI is a very famous stablecoin. And you can give leverage trading a go and you can learn, you can practice, which is fantastic. And you can eventually, when you are ready, you can try real leverage trading if you're brave enough. Yeah, there it is. 10,000 virtual DAIs that you can use to leverage trade. It shows the leaderboards of people who, and there's profit losses. Well, some of these are really impressive. 55% win rate, which is fantastic. And that is that. Let's look at statistics for the network. G trade volume, this is all time in the last 24 hours, $30 million in trade volume, 4,885 unique traders, $8 million in total trading fees, 291,000 trades, $10 million in all the pools. Fantastic. This is a lot of freaking data. And it looks like, so this is the stock, right? So these are the stock pairs. So an Apple USD, this is a small amount. What color is this? So ETH this is BTC USD, this is Euro USD's volume, $43 million. Euro Japanese yen, Solana USD, USD Japanese yen, New Zealand dollars, okay. This is by DAI. So again, this is ETH. BTC USD all time. So this is the last 30 days. This is the last 7 days. So of course, people trading Ethereum like crazy. G Trade stats by pairs. BTC USD. Interesting. So this is very cool. I love seeing all these statistics available on Gains. Platform staking. Staking. Let's have a look at staking. I think I'm gonna have to connect to my wallet right there. DAI. There's the verification of the APY we were talking about, right? 37% Vault APY. GNS DAI APY 64% inflation rate. That's cool because a lot of times staking platforms don't tell you what the inflation rate is. 20.83%. This explains the math behind it. GNS market cap $21 million. DAI Vault TVL $6 million. The current GNS value, right, 72 cents for one GNS, which is the Gains, their native token. Okay, this is it for Gains, guys. I hope you enjoyed that. Let's have a look at our last piece of news, which is about Quickswap. So Quickswap has some new dual reward pools. One of the really cool things you'll see is, right, we added dual mining rewards for CXBTC, right? So CXBTC is CelsiusX's BTC and LCD. These pools are now live. Dual farming rewards are also available for MATIC X, CelsiusX DeFi, and select other pairs. So we can see, let's look at the Celsius. So CelsiusX is Ethereum, 5%, pretty cool. And then, so this is for the ETH pair, CelsiusX and Ethereum pair, 5% rewards. That's pretty decent. CelsiusX ADA and CelsiusX Ethereum, 18% APY. CelsiusX Dodge and CelsiusX Ethereum, 36%. CelsiusX Bitcoin and Wrapped Bitcoin, the APY is to be discussed. Okay, that's interesting. MATIC X, right, 22% APY. So these are interesting pairs. CelsiusX has launched their own coins, so which is really good. So good opportunity for people. Good for Celsius as well, that they're expanding opportunities for people. So definitely something for you guys to keep an eye out on. Should Quickswap feature a predictions market created by PRDT Finance? That's what we're going to talk about today. A predictions market, I guess we'll look into that. So after a few days of discussion in our Reddit forum and across social platforms, Quickswap is introducing a governance vote about the possibility of featuring a predictions market built by PRDT Finance. We don't have time to look into this today, guys. Last week we opened up discussion. So basically, now it's moved on to a governance vote. The snapshot for the vote took place on May 30th. The vote will run until June 3rd. So if you are a quick holder and you want to vote on this, please do. To predict or not to predict, that is not the question. We want to be very clear. If this proposal passes and Quickswap does feature PRDT's prediction market, this doesn't mean that we're saying you should use it, right? Just like anything in crypto, with any space or any ecosystem, when new things happen, you have a choice to use it. You don't have to use it. And they say, they've pointed out several times in their blog, predictions markets are risky. So this is the idea of longs and shorts, very similar to what Gains did, which is what we just talked about before. Those who make correct predictions stand to gain a lot, right? The idea of longs and shorts. But those who make incorrect predictions stand to lose just as much. Quickswap and PRDT Finance encourage anyone who chooses to use their platform to do so with caution and only at their own risk. Therefore, the question isn't whether or not you should use the platform, it's whether or not Quickswap should feature it. The advantages to Quickswap featuring PRDT's predictions market include increased user engagement because you want more users to your platform, our website becoming more fun to use and attracting more dragons, right? Dragons are for the people, the Quickswap users, increased revenue for stakers in the Dragon's Lair, increased revenue to enable the team to expand, an extra tool for users, stronger partnerships with PRD Finance's experienced development team, no change to Quickswap's UI UX for users who choose not to use the predictions market. Okay, voter eligibility. If you're eligible to vote, that explains it. You're not eligible to vote if you hold old or new Quick on a centralized exchange wallet such as Binance. Of course, you need to hold it in your MetaMask. This is the snapshot. Let's have a look at the snapshot since we do have a little bit of time to see what is happening. Okay, so the current is yes, right? Yes, yes, yes. We haven't seen any no's at all. So Quickswap is going to have a predictions market, which is cool. It is dangerous, right? Like we talked about gains, and maybe you think about doing some practice. I'm sure there are quite a few other sites that allow you to work with predictions and sort of figure out, am I able to do this? Am I able to make some money? Am I able to take a risk? And then again, nothing I've said, guys, is financial advice. Please do your own research. It's definitely something to take into account because, like the Medium article said, right, you can make a lot of money. When Luna crashed, a lot of people made money on shorting Luna. That being said, a lot of people lost money on this. So that is it for today, guys. I hope you are happy with the green chart. I'm happy as well. I wouldn't be happy. Today, we were supposed to have a guy come on to do a podcast. He did not confirm, even though originally it was like, yeah, this time is totally okay. So his podcast would have been shown on Friday. He is a crypto investor and he does a bunch of other stuff in crypto. He has his own YouTube channel. So I don't think he's going to come on. That being said, I will try to find someone for the weekend. I am actually taking off on Friday because it is Dragon Boat Festival over here in Taiwan. That being said, I will still have a podcast out either Thursday evening or Friday, or on the weekend on Saturday sometime. So it'll either be someone else if I can scrounge them up, or someone from one of the people I work with. I'm thinking of asking one of the guy, he's into capital markets for the 21 share side. We'll see. Anyway, guys, thanks very much for joining us. I hope you had a good weekend. I hope you're very happy with the start of the week for crypto. Let's keep our fingers crossed that crypto keeps on this line. Keep an eye out for another interview. Like I said before on previous podcasts, we are going to be doing regular interviews. So one interview a week for the foreseeable future. And we have a few other people lined up, and we will talk to you guys later. Thanks, guys.